Hi, and welcome to our first episode of Danny Brown Talks Phoenix for 2019. As always, I'm joined by Garret Cerkvenik of JFQ Lending, and we are super excited to be with you guys and talk about the state of the real estate market and the mortgage industry as well. Garret, why don't you kick it off for us and kind of wrap up where we finished 2018 and what December looked like.
Okay. So, 2018 actually finished off a little differently than I anticipated. We saw this steady climb of interest rates throughout the entire year, and that leveled off and actually went down a little bit at the end. So we saw rates come down, anywhere from a quarter, half, sometimes even more, depending on the program. So a lot of folks, that were seeing these rates in the fives, and getting rates in the fives, we're now actually seeing rates down into the mid fours and sometimes even low fours, depending on the program. So the cool thing about that is it's really helping buyers, with buying power and being able to afford more house for, what, their debt ratio and their down payment will support. It's helping people get back into the refinance market, and really opening up that to a lot of, people that, weren't really seeing enough benefit to do it before. So
That's great.
Yeah, it's been really nice. And the cool thing is that, one of the things that happens when mortgage rates go up is it takes a while for the public to kind of catch up. You've got, somebody calls in to do a refinance and you tell them what rate they qualify for, and that's a little bit of a shock because they're still seeing or expecting rates that were much lower than that. At this point, client expectation has caught up, and so people are expecting to see rates in the fives and things like that, and they're actually pleasantly surprised when they're getting something better than what they've been seeing in the market. So it's kind of a cool time to be in the industry when you can really get people, something better than what they're hoping for.
Yeah, I was actually showing property today, showing new construction, and one of the incentives that a builder was offering, and builders offer incentives if you go with their in-house lender usually, they were buying rates down instead of bringing home prices down.
Really?
Yeah, so they wanted to keep home values steady in the neighborhood, so rather than giving people discounts on the purchase price, they were offering 3.99% interest rates on purchases, which I thought was pretty... just a creative way to try and give buyers some incentive to purchase.
Absolutely. I mean, most people, what they're focused on is their payment. It's not about what the purchase price is or anything like that. It's if I can afford this, fall in love with a house, it really doesn't matter what you're paying for it because you're going to be there for several years,
Right.
So it's really just about getting that payment down. So that works out good for everybody because you get a property that you can afford and the builder still gets the money that they were hoping to get when they built it.
Yeah.
So.
Yeah. So, I mean, on the real estate side of things, when 2018 started, everybody was predicting that 2018 was going to crush 2017 and that 2018 was going to be the best real estate market that Phoenix has ever seen. And we finished the year off not doing that at all. So that was a prediction that didn't come to fruition. The market definitely really slowed down towards the end of the year. I think that it needed to because it was going gangbusters for so long that property values were increasing month over month at a rate that just wasn't sustainable. So on average, where we finished the year from this time last year was property values on average increased 5.3%. So, the market, I think Econ 101 tells you that markets kind of always seek balance. And I think that that's what we're seeing right now is that the market's kind of seeking balance. So,
it seems like 5.3% is still a great year, though.
Oh, absolutely.
Typically, 2 to 3%, it usually rises with inflation.
Yeah. So we're still seeing property values increase, month over month above what inflation is at. So even though the market is slowing down, property values are still up. And it's not this crazy swing that a lot of articles and clickbait will try to get you to believe. It's just not happening. The market is, though, in transition. It's definitely shifting from a very strong seller's market into more of a balanced market. The pendulum still is a bit in the seller's arena, not the buyers, but we're coming back to just a normal run-of-the-mill real estate market, I think. And I think that that's a good thing. Buyers have been beaten up for a really long time in terms of the competition for homes, just due to the lack of inventory. So we're starting to see inventories go up, which is good for buyers. They're going to have more options. And the best time of year to be a buyer is actually right now through about June. So over the since the recession, the market's been super predictable. I don't really see any trends or anything that is going to upset that, really. That we're super busy, and this is the first week of January. We've got a ton of buyers that we're helping right now. We've got a bunch of listings that are about to go active. So based on what we're seeing personally within my own business, is I think that 2019 is going to be a good year for real estate, and buyers are going to get a little bit of relief in terms of the pressure that they've been under with the lack of options and the competition for housing. So that's kind of where we finished the year out. Right now we've got about 17,000 homes listed for sale in Phoenix, which is still too low, but that is actually up by about 1,000 from this time last year. So
where should it be?
For us to be more of a balanced market, we should be somewhere probably between 35 to 40,000 listings. So your balanced market is about 6 months worth of inventory. So it's going to be, as we get closer to that number, I think it's going to be a shock for a lot of sellers who have been used to listing your home on a Thursday, having multiple offers, and being under contract by Monday or Tuesday. It's not going to be abnormal for days on markets to be 90 days, 120 days, 180 days. And that's just a normal market. It's really interesting that there's going to be some realtors, listing agents, who have never experienced a normal market and have never had to have those reoccurring conversations with the seller saying, nothing's changed. We had 1 or 2 showings, and that's just kind of the way it is. It's going to take longer to sell your house. And you're going to probably have to offer buyers a little bit more incentives and be willing to kind of acquiesce to some of their requests, pay more concessions, maybe do some price reductions. And, looking for any of you people who are thinking of selling this year, in the past, you've looked at, my neighbor down the street who has the same floor plan as me sold for this. Well, I'm going to, I'm going to list my home for, 10,000 more or whatever. That's not going to be the case anymore. You're going to have to be listing probably a lot closer to what they sold at in order for you to sell as well, because the appreciation is just really slowing down.
Got it.
But again, that's a good thing. Appreciation for homes should be in line with where inflation is at, and maintaining, month over month, year over year gains of above 5%, in some areas 10%, is just not sustainable long term. So,
and remember, when you're selling a house, you still have to go buy another one.
Right.
So the way it shakes out with the balanced market just evens that out. To where
Absolutely.
you're not having to go through that same process and look at multiple houses and make a ton of offers that you're losing because investors are coming in and things like that. So.
Yeah, and I think it puts you actually in an advantageous role, because if you are selling in order to buy, usually you're a contingent offer, and if you're in a really strong, aggressive seller's market, the sellers of the homes you're looking at aren't going to be interested in talking to you because you're a contingent buyer who needs to sell. Well, now they are. And that's going to be really great for a lot of people who are ready to move up from the home that they're in and into the next one. And that's something that my team and I specialize in. That's our favorite people to help, our first-time home buyers and what I call move-up buyers, people who are selling in order to buy, because they're just really complicated transaction. First-time home buyers need a lot of help, as you know, and people who need to sell in order to buy, it's a complicated transaction, and they need a lot of help. So that's kind of why that's our niche.
Got it.
Yeah. So for the rest of the podcast, I thought it would be fun. We just started 2019, and everybody does this, and we're not any different. So I thought it'd be fun if we did some bold predictions.
In some ways, come on. Let's.
Well, we're better looking. I think we have we have
Yeah.
good personalities.
Okay.
We're funny at times, but I thought it'd be fun if we did a bold predictions for 2019. And this won't just be real estate and mortgage related, but kind of fun topics as well. So do you have any bold predictions for 2019 on the mortgage side?
On the mortgage side, and this goes against everything that I've been saying for the past probably 6 months,
Right.
and everything that is still out there as far as what interest rates are going to do. The Fed is still expected to raise rates twice this next year. For a while it was 4 times, went down to 3, and now everybody's predicting 2. I actually think that rates, just based on where the market's been the last few weeks, some different indicators I've been looking at, I think rates are actually going to be the same or less by the end of 2019. I really think we've leveled off, and I think that, they may tick down a little bit through the beginning of the year, level off, maybe increase a little bit, but I think by the end of 2019, rates are going to be in a great spot, and, be somewhere between, some of those low points we saw a couple of years ago and some of the high points we saw just last year.
It's funny, we did these lists independently of each other, and I came up with one of the same bold prediction is that the Fed does not raise rates in 2019 at all. I think that they're a little skittish with where the economy is and seeing things kind of slow down, that I think they put the brakes on and they get a lot of pressure from outside industries, and I don't think that we'll see rates rise at all. And I'm actually telling our buyer clients that the rates that you're seeing right now, don't feel rushed.
Yeah.
Buy a home when it makes sense for you and based on your timeline. Don't rush based on the thought process that rates are going to continue to go up, because I don't think that's going to happen.
Yeah.
One of my bold predictions for 2019, I don't know if it's very bold, but I think that property values will continue to increase. And I think that in 2019, when the year is said and done, that we will see property values increase at 4%.
Okay.
So right now, like I said, they're up above 5% from this time last year. I think when we have the same conversation in a year, that home values will have increased about 4%.
Got it. Okay. That's good. One of the things, well, actually, no, I think, one of the things I want to touch on the refi side is that, a lot of people, especially with, the rising rate market we've been in for the last year, have been saying that refi is dead. Especially a lot of people in my industry. There was a lot of talk that, 40% of lenders are going to dissolve or be absorbed by other bigger lenders, and that, the refinance market has dried up. And a lot of companies have been shifting all of their resources into purchase that were more refi heavy.
Sure.
I think that refi is going to be alive and well in 2019. There's a ton of programs out there that, are allowing people to do small incremental drops in their interest rate without having to requalify and, things like that. One of them comes to mind is called an FHA Streamline. It's for all the FHA borrowers out there. And with the small drop in interest rates, we've been able to help almost every person that we've spoken to that's closed a loan in the last 6 months get into something lower. So I think refi is going to be alive and well. I think that, it's something that is still going to be a big segment of the market.
Sure.
I think that, especially if you work with a smaller brokerage like myself, you're going to have options to refi if you worked with a retail bank before, because they're typically going to be a half to a full % higher than us.
Sure.
So even if you bought with, some of the big guys out there, your Wells Fargo's, your Bank of America's, Quicken Loans, you still have the opportunity to shop around and get something less and do a refinance that makes sense for little to no cost, and can find a better investment on your property and get a little cash back as well.
Well, and I mean, to touch on that, I read a statistic the other day that there's over $1 trillion worth of equity in the United States right now, because property values have gone up, and based on when people purchased over the last few years, they've seen a ton of equity. Wow. And one of the best ways to pull money out of your house rather than doing a second mortgage, because those rates tend to be higher, is
and variable.
And variable is to do a cash out refi. So I agree with you, as these rates continue to stay low and based on our predictions stay flat, that I think you're right, that people will continue to do refis, if not for lowering their interest rate or their payment, but for pulling money out to do remodeling and reinvesting it back into their home, or even starting businesses. I've heard more and more people are using the equity in their home to start small businesses, which I think is fantastic.
Yeah. One thing that we do a lot is, when you do a typical refinance, you get to skip 1 to 2 payments. You also get a refund from the balance of your escrow account. So a lot of folks end up with $3,000, $4,000, $5,000, $10,000 back in their pocket, even without doing an actual cash out refinance that typically requires more equity. So, you can do something that's going to give you a better interest rate, better payment, and still get a little money back for some of those miscellaneous odds and ends, paying off some small credit cards and things like that. So always some good options out there on the refi side. And I think that's going to continue into 2019.
Very good. Something that I think that we're going to start to see more in the market is I think we're going to see less people flipping homes as the profit margins continue to narrow with property values increasing a lot slower. I think that we will see less investor activity in the real estate market for flips.
Okay.
We may see more people buying and holding. I think the rental market's going to remain strong, but I think that you'll stop seeing as many institutional investors who are doing flips, mom and pop flips. I also think that there's going to be a lot of pressure put on the new iBuyer segment that's out there. So that's your Open Door, OfferPad, Zillow, Redfin's doing it, Remax is doing it, Keller Williams is doing it. So it's become this huge, not huge, but it's become a segment of the market. And I think, right now the iBuyers make up 5% or so of all real estate transactions in Phoenix. And they're banking on a seller selling them the home slightly below market, charging them way more than 6% in fees, and then turn around and flipping the property.
Yeah.
And it's been a great program because not only are they collecting, the fees that they're charging the seller, but they're also pricing the property at a higher price point than where they purchased it because the market's been increasing in value.
Which is a price that someone like you would actually just price it for if somebody came to you and sold
Correct.
it,
Yeah,
So
yeah.
they're buying the house at a discount.
Yeah, and I'm not knocking. I mean, I think these programs are great for people. A lot of sellers don't know that you can still have a realtor represent you if you're working with those companies. So I can absolutely still facilitate a transaction if you're exploring doing an Open Door, OfferPad, or Zillow program.
Okay.
But the point being is that I think that their formula is going to be really tested over this year as property values increase at a lower percentage or a lower rate month over month and year over year. So it'll be interesting to see how they evolve as the market continues to shift.
Interesting.
Yeah. Something else that I'm predicting is that I think Maricopa County will continue to be the #1 county in terms of growth in the United States.
Wow.
It's been the #1 county for growth, I think, for the last 5 years. And I think that trend continues into 2019.
Okay.
On a national level, we're seeing more and more natural disasters take place. And anytime there's a natural disaster in part of the country, we see a flock to Phoenix because we just don't have natural disasters. We've got
I
some
consider
heat.
the heat a natural. It's atrocious out here.
It is
That's
atrocious.
fine.
Sure.
It's not going to wipe out your house.
But I've been joking recently that the #1 import for Arizona is Californians. We're helping more and more people from California who are looking at relocating their businesses here, just relocating in general because the taxes there are crazy. The traffic is crazy. And they've got, the natural disasters with the fires that recently happened. It seems like whenever they have the fires, it's followed by mudslides, potential earthquake. All those things are really, they can push people over the edge. So we're seeing a lot of Californians relocating to the Phoenix area. And it's only hot for like 4 months out of the year.
I give it 5.5 months, but okay.
All right. Do you have any other predictions that...
Not in the mortgage rate space. I've got some sports predictions here in Arizona. I'm gonna stick to the college side.
Okay. Well, let's save that because I have a few more real estate ones I want to touch on before we get to the.
All right, do it.
I think home builders are finally going to shift and start building starter homes.
Okay.
I think that the luxury market, the higher end homes, that market is kind of becoming saturated. And as interest rates, we don't think that they're going to rise. We think they're going to remain relatively flat. But I think that a huge driver of the market is going to be, and I hate the term millennials, but millennials. I think that term is just played out. But I think first-time home buyers are going to be the largest driving force in the real estate market. I think that they're aging, they're wanting to start families, and anytime those things happen, people tend to want to own the property that they're in. And I think they're going to figure out that that's the quickest way to wealth as well. And I think home builders are going to recognize that and finally shift from building these McMansions to building starter homes for first-time home buyers.
I actually had something similar on my list with millennials, because I read a stat that 45% of buyers are going to be in that millennial category this year.
And that's almost the majority of the market.
Yeah. And, the reason being is the biggest group of millennials are hitting that 29 to 30 age group, which is statistically the the age group where they start building a family, and they start wanting to become homeowners. And so they're the biggest group of millennials, which is what 80 to 87, something like that, 90, 92, something, whatever it is.
Depends on what website you look at.
Exactly.
Yeah. And some websites were millennials, and other websites were not. I don't know.
Yeah. Well, I don't like lumping myself into that category, but it's fine.
Yeah. And then kind of the last thing that I think, so 2018, there was a lot of commotion about cryptocurrency. So a lot of stuff about Bitcoin and Ether, or can't remember how to pronounce it. But all these different cryptocurrencies were out there and got a lot of attention. I think in 2019, this is going to be the year that blockchain, which is the technology behind cryptocurrency, comes to the forefront and really starts to disrupt different industries. I think that in the real estate world, I'm very, very interested to see what companies can disrupt the real estate world using blockchain technology, especially when it comes to things like title. You pay you pay all these fees for title insurance, and you have to go through a title company when you're purchasing a property to make sure that you get clear title. Well, if you were to use blockchain technology and you had a ledger of everybody that owned the property over time, and that can't be manipulated or changed, what's the point of having title insurance? Yeah. So, I mean, I don't pretend to be an expert at all when it comes to that kind of stuff. I just think that the technology behind the cryptocurrencies is very, very interesting and comes to kind of the forefront and starts to disrupt multiple industries, not just real estate, but kind of across the board.
Okay, cool.
Yeah. So that's kind of it for me in terms of what I think bold predictions for the real estate market in 2019. So we did do some fun ones, right?
Kind of fun.
Kind of fun.
Depending on what you think about Arizona sports.
Yeah. So, well, you have a positive one, and I have a negative one.
I have a positive one.
Yeah.
I'm a big ASU fan, and I think that our ASU football and basketball programs are going to do well this year. I could see. Well, my prediction is that ASU football is going to be in the top 25. We're going to end a ranked team. I mean, we could even be top 10, maybe go to the Rose Bowl, something like that.
Wow,
but
that'd be big.
I don't know. That would be big.
They need a defense first.
I think everybody was pleasantly surprised with how well Herm did this year.
Yeah.
And so I think that's something that could happen this next year now that he's got a year under his belt.
Yeah.
You
play to win the game with Herm.
Yes, you do. Yes, you do. I think ASU basketball is going to be good too. We just beat Kansas. And so we've got this. We're not doing really great so far, but I think with a win like that, I mean, what we can do. So I think ASU makes the tourney. I think, and I think we go into the second round at least.
Wow.
Maybe not the Sweet 16, but I think we're going in the second round of the tourney.
All right. Well, I'm a little bit more pessimistic on Arizona sports.
Right.
So I think the three the professional teams that are here in Phoenix, so you've got the Arizona Cardinals, the Phoenix Suns, and the Diamondbacks. I think that they all finish in the bottom quarter of the league. In fact, I think probably the Suns and Cardinals, this may not be a bold prediction, but I think they'll be last in both sports. Cardinals finished last this year. They're going to get the number 1 draft pick. I hope they trade it away and get multiple picks in like the second and third rounds, but they probably won't.
Nope.
And they'll pick somebody that'll be a bust. And I think that they will continue to struggle in the 2019 season. And I think the Suns are going to continue to be terrible as long as Robert Sarver is the owner of the team.
Yeah.
A lot of bad press came out with him this last year about potentially moving the team. And I think that kind of just continues. And I don't follow baseball at all, but I don't know.
Just figured rope them in
I
there.
just put them all together.
Toss the Coyotes in there as well. And
I know less about.
We're the worst 4-team, professional 4-team state in the country. So
yeah,
you just lump them all.
And we're a large market too. I mean,
We're a
Phoenix
huge
is the 5th largest city in the country, and we have
I
terrible
really had
sports.
high hopes for the Suns. With DeAndre Ayton coming in, and we got Devin Booker. I think we've got a good base. So, but
they get good young guys, and then
it obviously
then
hasn't come to fruition yet
because nobody likes to play for Sarver.
Exactly.
Yeah. So Game of Thrones, if you're a Game of Thrones fan out there, I think that Jon Snow gets killed for good in the final season of Game of Thrones, which premieres, I think, in April. Super stoked and excited about.
Everybody in
they
that
do.
show,
They do. And I think everybody loves Jon Snow. So I think he'll
Get him out of there.
Yeah, I
All
think
right.
he's going to get killed.
Well, yeah.
You're done?
I think I don't know if I have any. I think Danny Brown's going to get a new haircut this year for the
Nope.
first time in the entire time I've known him. So
I'm just happy to still have hair.
Hey, there you go. There you go. We don't all.
All right, well, I'm going to keep going then.
All
I
right,
think
you load
I
it
think
up.
Tiger Woods is going to win the U.S. Open.
All right.
I think he's struggled for a super long time, and the end of this golf season, he won some championships, and I think he's going to carry that into 2019, and I think he's going to win the U.S. Open.
Okay.
I have no basis on this at all, but I think Netflix is going to buy or merge with Spotify. I think those two platforms coming together would control a lot of content, both audio and visual, and it seems like a perfect fit for me.
You know, Spotify and Hulu already are together.
No, I didn't know that.
Yeah, well, there you go, Danny. I have the Spotify and Hulu.
Well,
they actually give you a deal for $2 for Hulu if you already have a Spotify.
All right.
account.
Well,
So
then, okay.
there's
So
some
Netflix
sort of relationship there.
Okay.
Just gonna buy all of them.
Netflix has so much money.
That's true.
And I think Spotify is starting to lose to Apple and their music platform that they have. So I think that and Hulu is way behind Amazon and Netflix in terms of content that they're generating. So
yeah,
I think Netflix they should approach Spotify and take them over.
all right. I'll pass that along to the powers that be over there.
I think this is going to be the year of voice assistants. I think voice assistants are gaining a lot of traction. I think everybody has them, but they don't know quite what to do with them.
Okay.
So I think voice assistants are pretty similar to kind of what the internet was in the super early days. I think that as the technology becomes more user-friendly, that you are going to be able to carry on conversations with chatbots, and instead of calling customer service lines to tell them that, instead of calling Cox to tell them that your box isn't working, that you'll be able to have a conversation with your voice assistant, and they'll be able to walk you through resetting it, and you'll be able to start doing more and more things through your assistant rather than just having it turn on the lights or getting flash updates.
I read something, just a headline. I didn't read too much into it, but that it was within a couple of years or something, you're going to be able to start having conversations with bots, and you won't even know that you were talking to one. You think because the voice is going to be so, it's going to be done so well that you're to think you're speaking to a live person, and it's going to be able to react in real time to what you're actually saying, that you will no longer know that you are talking to a machine.
Well, I think 2019 is the start of that.
Yeah.
Yeah. I think this is kind of a personal one for our little group of friends, but I'm speculating in 2019 that because we're all married now.
Yes.
I think that one of us is not us, but one of our wives is pregnant before the end of the year.
Is this how you're announcing it, Daddy?
No.
Danny?
I'm not. But I think that someone from within our friend group is going to finish the year and make an announcement that they're pregnant.
Okay. It's not going to be me. Maybe. Who
Maybe.
knows?
I don't know.
We'll see what my wife says.
Yeah. And finally, I think that you're moving into our office. So at the end of this month, Myriad Real Estate Group will be leaving the office space that we've been in for the last 4 years and getting our own office space. We've shared office space now for a while with Rensler Media, who helps produce our podcast. And we need more space. We're growing. They're growing as well. And so we're moving just down the street. We're still going to be in Central Phoenix, just a block away. And we're really excited about it. And you and your team are going to rent space from us as well. So we're going to have an in-house lender to meet with our clients, which will be awesome. And I think really give an advantage to our buyers by having you in-house. So
Absolutely.
Yeah.
You can come in for a buyer consultation where you're sitting down and talking to Danny and his team about, your goals and things like that. And then they can come right into our office and get pre-approved, and kind of be a one-stop shop for all of it. So,
absolutely. Not to mention when problems come up, you'll be right around the corner, and we can say, hey, this client's having this issue, and boom, it's taken care of because you're right there.
Exactly.
So I think that the coming together of our two companies is going to be really exciting.
Yep.
And I'm predicting that 2019 is going to be the best year for Myriad Real Estate Group, as well as JFQ Lending and our partnership. So we're super
Perfect.
excited.
We are as well.
So I'd love to hear what your 2019 bold predictions are. They can be pop culture, they can be business related. So definitely leave us some comments in the notes, and we will see you next month, where we will kind of wrap up what the start of the year looked like in the real estate and mortgage industry and see how close we are with our predictions.
Yes, indeed.
Yeah. So thanks a lot for tuning in, and we'll see you next month.
Have a good weekend.